You're watching the Business Today show. I'm Nabila Jamal, taking you through all the top business news. First, the headlines. Rupee slumps to an all-time low as Fed rate hike boosts dollar. Experts believe that rupee could weaken further to hit 79 against the US dollar. Now, Sensex falls over 350 points as Dalal Street's rollercoaster ride continues. Nifty ends at 16,300 mark. Power, metal, PSU, banks drag. Investors lose 7.6 lakh crores in 2 sessions. RIL shares plunge on weak market, down by 4% in trade. Brokerages bullish on the stock post Q4 results. Morgan Stanley sees $50 billion addition in RIL's market cap in 2022. LIC continued to attract bidders on the final day of the bidding process. However, FIIs shunned the mega IPO over market risks. India's biggest IPO to list on the bourses on May 17th, but a falling grey market premium is making investors nervous. The allotment of shares is expected to take place on the 12th of May. The Indian rupee touched an all-time low of 77.4 against the US dollar. The key factor driving the rupee lower was a surge in the US dollar globally, following the United States Federal Reserve's 50 basis point rate hike just last week and its guidance for more rate hikes in the coming months. While you are already grappling with soaring prices, are you now thinking how the fall in rupee will really impact you? Sakshi Batra is standing by with us with those details. Sakshi, over to you.
Well, that's right. The Indian rupee has slipped to its lowest level of 77.5 to the dollar. This is the first time that it has gone past the 77 per dollar mark. And one must remember that all this is a global issue and not just limited to India, as all Asian currencies have actually slipped against the dollar. Now, this is led by the yuan, the Chinese currency, which is at its lowest level since 2020, which is dragging down the other currencies like the Thailand baht, the Philippines peso, South African rand, the Indonesian rupee. All of them are actually depreciating too. And now this is because the US dollar is constantly rising. Higher US yields are actually pushing the US dollar higher, which is together creating a massive risk-off in the riskier assets in emerging markets like India. Now, a weaker rupee also eats into the FII's returns into the Indian assets, thereby leading to higher FII outflows from the Indian markets too, which again leads to a fall in Indian markets, and that is exerting pressure on the rupee as well. The Indian rupee is also more vulnerable than the other currencies, and that is due to higher crude oil prices, as India is one of the highest importers of crude oil. Now, we are already witnessing a widening of trade deficit to over $20 billion per month, which also is again weighing on the rupee. Now, how is a weaker rupee really impacting you and me? Now, for the economy, you must understand that the rupee devaluation means imports become dearer, and inflation, which is already a big problem, may worsen from here. For companies, that is the export-oriented companies, and those businesses actually benefit, like the IT or the pharma companies with a depreciating rupee, while for importers, they will actually need to shell out more money due to this weaker rupee. On an individual level, your purchasing power really reduces. So in case you've been thinking of traveling abroad or studying abroad as well, be prepared to shell out more on that too. Now, the question is this record low a new normal for the rupee now? Well, for the short term, yes, because experts do believe that the rupee may further slip to 78 or even 79 levels.
Oil prices are on slippery slopes sparked by fears of global recession, dampening demand, with investors eyeing European Union talks on a Russian oil embargo that is expected to tighten global supplies. Now, global markets are also spooked by concerns over interest rate hikes and extended COVID-19 lockdowns in China. A recent price cut by Saudi Arabia has also reflected worries over global oil demand. Saudi Arabia, the world's top oil exporter, has now lowered crude oil prices for Asia as well as Europe for June as COVID lockdowns in China weigh on the demand. Saudi Aramco has now dropped its key Arab light crude grade for next month's shipments to Asia to $4.4 a barrel. While fuel prices have not been hiked in over a month in India, the question now is, could the Aam Aadmi get some relief with Saudi giving a discount to Asian countries? And the roller coaster ride continues on Dalal Street. There was no respite for bulls on Dalal Street as domestic benchmark indices fell in tandem with their global counterparts. Though Sensex and Nifty both hit a 2-month low, buying in IT and financial shares helped make a sharp recovery from the day's low. Sensex, which had tumbled to a low of 53,980 in the opening trades, recouped partly and ended at 54,470. Nifty declined over 100 points, barely able to hold above 16,300. A tumbling rupee and FPI's pulling out of the Indian markets there really hurt investor sentiments. Now, growing concerns over global recession, poor performance by global equity markets led to the fall today. Big boy Reliance Industries was the top blue chip. Lagarde plunging over 4% after its Q4 numbers fell slightly short of expectations. Now, other nifty losers included Nestle, Hero MotoCorp, IndusLand Bank and Tata Steel. The broader markets here ended with deeper cuts. In fact, sectorally, Nifty Media, Metal and PSU Bank indices plunged by over 2% each. Now, as markets continue to remain in a bear grip and volatility stays high, are you thinking of rejigging your portfolio? Then watch this conversation here between our global business editor, Udayan Mukherjee, and market guru, Sandeep Tandon of Quant Money Managers. It will really help you navigate in these turbulent times.
Sandeep, it's great to have you on the show. Since you are one of those unique fund managers, CIOs who also look at quantitative methods, as your name suggests, Quant, in evaluating investments. Let me start by asking you what the quantitative desk is telling you now in terms of market signals. Is it suggesting that there are deeper cuts which lie ahead, or are we somewhere close to the bottom for 2022?
So then, we over a period of time, apart from quantitative and the qualitative, the fundamental work, we have also built a lot of things on the behavior side, okay? And where we combine in our own framework called VLRD framework, where we give 1/3 weightage on the valuation analytics, 1/3 on the risk appetite, and 1/3 on the liquidity, okay? So we try to capture, all qualitative, quantitative, and behavior, what we call fundamental Atma, liquidity, the prana, and sentiment, the Maya. We try to capture. And it's really helped us in taking a much larger call. So as a house, our macro predictive analytic models are definitely endorsing that we are, if I have to look at from a very near-term perspective, I think the fear cycle is actually peaking out. So we are at the cusp of that inflection point. First, let me answer first from a very near-term perspective, because that's a concern which a lot of people have. So from a very near-term perspective, whether you talk about a dollar index, or you're talking about more of the currency sides, or even the S&P or the NASDAQ, which has corrected significantly, I think we have reached an inflection point where you can expect significantly up move or ferocious move is also I'm not ruling out, because the fear is too high. 2022, the way we have described, is all about how the employed also the most of the asset class will remain elevated and as compared to 2009, 20 and 21. So you have to play for a smaller swings in the market. It's going to be very challenging and difficult year.
So are you saying that near term we may have a bottom in place and we may have a sharp rally from here, but you are not confident that a final bottom has been played? Sense lies in actually playing these sell-offs and rallies intermittently from a tactical point of view, but don't get wedded to a view that a clean trend will be visible in the next 6 to 9 months.
So let me then give you first our big picture, which is like a decade perspective and how it's playing out. It'll give you a fairly good sense. So if you recollect right from March 2020, when fear was very high, that's a very classic bottom, because risk appetite was the lifetime low, whatever data we have, and the liquidity was also lifetime high. So it's a lethal combination of bull run. So that lasted till September 2021. And by September 2021, we saw a very unique thing. Risk appetite started for global assets started declining. Money flow towards global equity also was a multi-decades high. And there was a liquidity was also started shrinking. So if I have to see, there was a euphoric move into September 2021, yes. But if you dissect this euphoria or this money flow analysis, this very interesting data point which came out, that euphoria was confined only to the growth stocks. Okay, which is, if you want to further dissect into a consumption name or the new age technology or the technology companies where value is bottoming out. So if you look at from a perception analytics, the way we define the market in September 2021, if I have to take a big broader call, the growth stock perception analytics, or what we call multiple and valuation analytics, has peaked out maybe from a decade perspective. So something has changed from September 2021, and could be a bigger and longer term call, because this is the area where grossly over ownership exists, and this is a cycle which has been played out for multi years now. So that is something big change which we are highlighting. And I think from a larger perspective, you will see this bouts of volatility, you will see recovery in these stocks also. But from a longer term perspective, I think something has changed. So value should be your core holding. That's what we have done, and growth should be your tactical position. So if I have to look at, this is a larger perspective which we believe which is going to play out. And from a very near term perspective, I think whether it's technology or whether it's a consumption name, they are also significantly oversold right now. So, and the way panic is spreading, so we want to capitalize on the fear. So as long fear remains high, we like to participate. And whenever you see complacency, we like to prune down the exposure.
There is no great greed which is visible in the bank nifty, Sandeep. I mean, it's a segment which has underperformed quite a bit. Would you put it in that category of growth stocks which did well over the last half a decade or so, or last decade or so, and which will continue to underperform? Or is your call contrarian on the financial space now as a fund house?
Okay. So if you really, since we're talking about the growth stock peaking out, and if you dissect the bank nifty into private sector and public sector banks, and then you try to look at the perception analytics data, which we try to look at from the behavior finance point of view, very interesting thing is coming out that perception analytics for the PSU, for the public sector, for the private sector bank, has made a long-term top. Okay, which means the valuation analytics or valuation multiple, which we have seen in last many years, will shrink and decline. Where PSU banks in the exactly in the opposite side. So in their early stage of recovery, whether you talk about the one of the largest public sector banks or the top 3 public sector banks, is so that's a data point which is showing. That does not mean we are very negative on financials. We believe financials will outperform IT, financials will outperform consumption on absolute basis as well as relative basis. But within banking, if I have to take a larger or longer term call, then I will like to take a longer term calls on the PSU banks over private sector banks.
I note that many of your funds have names like Vedanta, ITC, Sandeep, in your portfolio. Is it staying with that overall call that this year value as a theme should outperform growth? Do these names fit that bill?
So it fits cover that aspect also, but we bought metals quite early, right from October 2020 onwards. We have been bullish on the metal SSPs, because if I have to give a much longer term perspective call, right from 2019 we have been talking about that 2020 or this current decade belongs to commodities. So we are extremely bullish on commodities as a space. It's a structured bull run which is unfolding, and we were very early to spot that. And within commodities, we believe agri as a commodity will give the best performance. Okay, if I have to take a big call, which asset class I will to deploy very largest money, I think is the agri. Unfortunately, in India, you cannot play that theme directly. That's the reason in our portfolio we have relatively large exposure towards sugar stocks or metal stock wherever we can participate. Okay, because you cannot play these names directly. And metals, yes, and of course some of the names which you mentioned, they are part of these thesis. And though from a very near-term perspective, there might be challenges on the metal space because one of the near-term cycles are peaking out. But if I have to look at from a longer-term perspective, we remain very constructive in these things.
You know, Sandeep, you're a fund house now, and you don't invest only in equities. You have bond funds as well. So I want your perspective. I mean, even the kind of quantitative bearing that you get into your analysis, what do you expect to see with interest rates over the next 6 to 9 months in India? And what would you suggest could be the returns from fixed income funds this year?
So let's talk about US market first, because that's an area where we have more than 100 years of history to talk about, and India is very, very limited. Okay. See, as I said, right from 2019, we have been showcasing that from 2020, the commodity prices will be started rallying because of a lot of Earth-related changes. Earth Analytics data is endorsing that, and from 2021, the inflation will come back. Now, if I have to look at from a decade perspective, let me give you a very interesting data point. We believe that both inflation and interest rate, particularly on the developed markets, are heading high. And we believe that they can have potential to become 6 to 9 times whatever bottoms we have seen in 10 years, like the 1.18% we have seen in 10 years yield. So something 6 to 9% what we expect should be, that's a very conservative number by 2027, 28. That's our big macro predictive analytic models has been showcasing. That's what we have written in our book also. So we remain very constructive from a longer term perspective, but as you say that all moves will not be linear.
And you can catch the full interview on businesstoday.in and of course our YouTube channel. RIL among the big losers on the street today as the company reported weaker than expected net profit and also reported a fall in profitability for the first time in financial year 2022. Consolidated profit after tax missed the street's estimate by 4% year-on-year and 3% quarter-on-quarter due to lower other income and miss in retail business. Now, however, Reliance becomes indeed the first Indian company with gross revenue surpassing $100 billion, and global brokerage firm Morgan Stanley, very bullish on the stock, has set a target price of 3,253 rupees, indicating an upside of over 25% from the current marketplace. Morgan Stanley sees a $50 billion addition in Reliance Industries' market cap in 2022. India's biggest IPO, LIC, continued to attract bidders on the final day of the bidding process as well. While retail investors flocked to invest in the insurance behemoth, FIIs shunned the mega IPO over market risks. LIC is now expected to make a debut on Dalal Street on the 17th of May, but a falling grey market premium is making investors nervous now. The allotment of shares is expected to take place on the 12th of May.
Despite all the kind of criticism that was coming, be it the valuation, be it government's decision to bring down its dilution, of course, the external factors that were impacting because of the geopolitical issues, do you think the listing day will be good enough to give a response to everybody who was commenting on this?
No, there is no, there is no need for me to respond on that thing. Our effort has been that LIC needs to be listed. We have worked very hard for it. LIC has worked very hard for it. People have a lot of, loyalty, respect for LIC, which is also, gauged from the fact that there's such a large issue. In fact, the largest in the history has been, under these conditions, also has been very well lifted, and lifted largely by domestic investors, including policyholders, including employees, including retailers. So it is also leading to deepening of capital markets. So I think it's a proud moment for all of us.
We've observed that as and when Deepam proceeds with certain kind of asset sales, there's been a lot of criticism in terms of court cases that comes up also. Do you have a word to say that how is the kind of preparation you have to do to battle these kind of external factors that keep coming?
No, I think we have to be ready that we are dealing with public assets. We do it with the most stringent system of transparent competitive bidding, keeping in view that we are dealing with public assets. But still people have a right to challenge, because I think that's what democracy is. And we always go back to courts and give our point of view. And most of the time, that gets vindicated. Of course, it takes time, but that is what, when we are dealing with public systems, we got to be ready for that, for any accountability.
Now, amid the ongoing weakness in the equity market, at least 3 initial public offerings by Prudent Corporate Advisory Services, Delivery Limited, as well as Venus Pipes and Tubes are slated to hit the primary market this week. The IPOs, which came close to the heels of insurance behemoth LIC's IPO, these 3 public offers are now expected to raise nearly 6,000 crore rupees from investors. Prudent Corporate Advisory Services will open for subscription on the 10th of May. A price band of 595 to 630 rupees has been fixed there for the public issue. The much anticipated IPO of logistics company Delivery will open for subscription from 11th of May. The company has now fixed a price band here of 462 to 487 rupees. Venus Pipes and Tubes, meanwhile, which will also kick off for subscription from the 11th of May, has fixed a price band of 310 to 326 rupees for the upcoming publication. Meanwhile, luxury car maker Audi has seen quite a stellar 2021 logging in growth of 101% in sales. In an exclusive chat with Business Today's TV, Chetan Bhutani, the head of Audi India, Balbir Singh Dhillon, said that Audi is bullish on EVs, and owing to rising commodity prices here, a price hike will be certainly undertaken soon. Let's take a quick listen to an excerpt of this conversation.
Tell us about the whole electric vehicle ecosystem. The government on its part is, of course, doing what needs to be done and pushing for it harder. Audi e-tron has been great in demand. A lot of celebrities, in fact, have also started buying into Audi e-tron. And of course, we've been also very bullish on production of electric vehicles in India. Tell us about the performance of Audi e-tron and how's it really going?
Well, you're absolutely right. We are very bullish on electric mobility in the country. And you can see, you read the news on an everyday basis where not only the government is trying their best, but also the industry is also taking their first steps into this electric mobility. And as I always say, electric mobility will not be successful overnight. It's a journey that we have to tread together, and very, very strong journey. And believing that, we launched already 5 cars last year. And this year we will run these cars for the full year, because we launched these cars only in the second half of last year. And from the time we have launched these cars, we are doing extremely well. In fact, most of the cars that we are able to import, as we are importing all of these cars, they're already pre-sold. So this is the kind of potential that we have.
I want to ask you, how's the outlook for the year going ahead, and if there are any possible hikes that you'll be undertaking?
So yes, we have taken a 3% up to 3% price increase from 1st April. And as you know, commodity prices are going up, and partly also because of exchange rates. So all these things do impact. Even shipment costs are becoming more and more expensive. So I do see in the times to come, potentially we may have to take another price increase in the coming months. No doubt.
What is the timeline for the price hike? I mean, another 2 months, another quarter? What can the viewers and your possible customers expect before they go and buy the vehicles at old prices?
And normally what we do is, whenever there's a price increase, we do get back to media. Through media, we are able to reach out to our customers, and we give them sufficient time if they want to prepone their purchase. So at this point in time, I can't say that it's going to happen immediately in a month or so. We will wait for some time. We've just taken 1 price increase. We cannot be that in next 3 months we again do it. So I think somewhere in the second half of this year we will see. We will always try not to pass on the price increase, but if it goes beyond a point, then we will have to partially pass on to the customers. So let us see when it happens. But I can't say when, but it's not coming immediately.
All right, that's it that we could pack here on this show of Business Today. Until next time, thank you for watching.